Hi everyone. So it's been very interesting 2 weeks, and I will quote Ted that these 2 weeks were really wild. So of course Donald Trump is now officially president of the United States, and we had like five sorry like 10 minutes ago, we had information about tariffs to Canada and Mexico. Of course, not the first time. Market reactions was crazy, and a lot of things going on a macro space. So ECB cut rates, Fed kept rates steady. So I'm sure we have a lot to talk about, and also correlations are everywhere. And of course, tech is insane. So yeah, Ted, maybe let's start with macro. And is everything that happened from macro perspective is what you expected, or were you surprised? And what you see, and what are your views?
I don't know. I've seen a fair amount, and no, not everything's aligning with my expectations. And I will share my screen and tell you a little bit about how I'm seeing things. So where I wanted to start today was just a quick agenda. I want to just chat about the wild ride that we've had over the past 2 weeks, then touch a little bit on macro regime, signals, and then positions and trades. So we kicked off what I'm calling Trump 2.0 on the 17th of January. This was while all of the elites in the crypto industry were at the crypto ball, and Trump came out with, or his people came out with, the Trump meme coin, in which millions were made and millions were lost in short order all over the weekend. So this was how we kicked things off in the United States on Friday the 17th. What a weekend. We've also seen with the talk about tariffs, those have been particularly bullish for the dollar, which the dollar appears to be weakening in my mind. But there's a new tariff in town. That's a pun. New sheriff in town. And the new tariff, every time we get a sort of a tariff threat, which I guess we had one this afternoon in the loonie, we get a little pop in the dollar. So that's keeping the dollar buoyant here for the time being. And so we'll see that continue to play out. That said, I did get a sell signal last Friday on the dollar, and it's holding despite the Fed on pause yesterday. So no decrease in federal funds rate, and then we've had other central banks continuing to cut rates. We had the Bank of Canada cut by 50 basis points, and we had ECB cut today. And there was really no considerable changes in cross currency pairs, except for Canada at the end of the day when tariffs were mentioned. On the 22nd, this was Wednesday, 2 days after the inauguration, with great fanfare, the Trump 2.0 team announced the Stargate project. That was on the 22nd. We had three speakers, and all of whom committed, quote, 500 billion, which Musk quickly told us they only had 10 billion. But nevertheless, this was a real pump for semis. So at that time, on the day of the announcement, we had semis ripped to cycle highs. Then on DeepSeek, which actually the announcement about the new product or new version came out on the 20th, but didn't seem to get any attention during the week, except for maybe late in the day on Friday. And it primarily surfaced after the close with the DeepSeek announcement on the 20th. People seemed to understand what was happening, or at least became aware of it on the 24th. And later over that weekend, the Bank of China put out an AI industry development action plan, and is planning to release $137 billion for $137 billion to support their AI. Well, that was on Monday morning. Basically, from Friday to Monday, we saw a 12% drop in SMH, or the semiconductor index. And that was a 1 day, basically a 1 day, 2 standard deviation move. If people are playing in this space, they just need to be ready to deal with a fair amount of volatility, because I don't think it's going away. And then I'm sure you'll touch on this, Vi, but Liz Ann Saunders from Schwab pointed out that day, Monday, was the single highest day dispersion, and second highest in the past 1.5 decades. So a huge dispersion day, and you can see that the only other day that rivaled that was in the middle of 2020 during the pandemic. So just huge dispersion. If you played something other than tech, you played something other than semiconductors on that Monday, you probably did okay in other sectors. From a macro regime, so that's basically the 2 weeks of Trump 2.0. We can expect more, expect the unexpected. From a macro regime point of view, my service tells me we are in reflation, which is a change. We were in inflation last time we talked, which is also referred to as stagflation. So we have now an environment which is growth up, inflation up. This is questionable as well. So what we saw, this threw me for a huge curveball. So I tracked the Atlanta Fed, and they've been pretty consistently, moving the GDP now forecast up since the beginning of the year. And on the 28th, they released an update from 3.0% estimated GDP Q4 to 3.2. Yesterday, they came out with 2.3. Miraculously, that matched the number that was released today. And so we have a growth deceleration of sorts. Q3 was at 2.8%. So we basically lost 50 basis points of GDP in the fourth quarter. From an inflation point of view, we had since we spoke 16 days ago. And since we spoke, we had the CPI release that was up to 2.9%. And then, of course, we had core CPI, which actually declined by a couple basis points to plus 3.2% for December. So we have inflation firm in the 3 area. We have PCE to be released tomorrow. You can pretty much get the number from today's GDP report and the PCE pricing. I think that came in around 2.5%. The Cleveland Fed's estimating 2.61% for PCE headline and 2.83% for core. That's pretty much in line with where they were a couple of weeks ago. So not much change there. I don't think it's going to be unless we have significant moves one way or another. I don't think we're going to get much from that tomorrow. Tomorrow features not only PCE, but the employment cost index comes out tomorrow as well. So that should be interesting to see how that's affecting overall costs. From a signaling point of view, last time I had a bowling ball wrapped in dollars. This time I have a sumo wrestler wrapped in yen. And just a few things that have changed. I think if you might recall, when we last spoke, I was 72% cash, and that was actually I was at 80% coming into the first of the year, so I had actually started to deploy some cash, and have had a lot of signals since, which has got me down to about 30% cash. So I've really put a lot to work in the last couple of weeks, and I want to just kind of talk about why. So as you know, I use weekly charts, take a look at moves in the market, and take a look at this. I'm primarily using trend following, but trend following often is late to the game. So I use a Williams %R indicator on the weekly chart, and when it crosses from deeply oversold to from deeply oversold area, then I'll take usually it's a 200 basis point starting position. So got a signal on the 17th to buy yen. And so the yen, the currency pair trade and the carry trade that unwind that we saw from August 5th may be brewing beneath the surface. We'll see where this goes. Also last week, at the end of the week, I had been long dollar. I got a sell signal on the weekly chart on the dollar. It's popped a little bit this week, but sell signal still active. Also on the week of the 17th, I got a buy signal in bonds. This corresponded with like max bearishness the week before. Pretty much everything in my feed was bearish bonds. And so the following week, at the end of the week, I did get a buy signal in bonds. This happens to be BND, which is the Vanguard equivalent to AGG, or Aggregate Bond Index. Just an example of a signal that prompted me to get long across a variety of different bond ETFs. Mid caps also came out with a weekly buy the week of the 17th, along with Europe. So this happens to be the EZU. Got a nice buy signal with a divergence here. Got a nice buy signal on the 17th, along with EEM and some other, EEM as well. So as a result of that, and then commodities, I've got commodities with an emerging sell signal. This is just fresh this week. It doesn't count unless it's at the end of the weekly close. So I'm watching PDBC, which I've got about a 400 basis point long position in PDBC right now. And if this holds, I'll take 25% of that position off at the end of this week. My stop's still not been hit, so I'll let it ride until the stop is hit. It actually kind of looks like it might move forward from here, but we'll see. So as a result, where I am from a positioning point of view, and this is quite a lot different than what we talked about just 16 days ago. I'm long FXI, I'm short dollar, long gold, GDX, silver. I'm long BND, a range of bond ETFs, long CTA. We talked about that last time, IVOL and TUA. Long MDY, which is mid caps, and actually, you can avoid a lot of this craziness in NQ and SPX or ES with by getting outside of the large caps. And so MDY has been a good starting position, along with Europe, EFA, and EEM. And then I'm watching PDBC, and I'm cutting XLE. So from a just run through a little bit of these charts in terms of just showing where I entered and where I am right now. So this happens to be FXY. Entered this, saw it developing, entered on the 15th, doubled the position on the 16th. And I'm a position, this is a position portfolio. It's not a trading portfolio. It's like I'll let it go until my stops hit, or it just gets really overbought and I start taking some off. So this is starting to work for me. Have to be patient sometimes with this counter trend, with these counter trend purchases. UUP, shared this last time, got long in December, added to my position in early January. At the end of coming into the 21st, stop started to get hit, and I ended up closing out the position over the last, actually closed the final part of that yesterday. So out of UUP, in my trading account, I am long UDN. UDN is a short dollar trade. And then, of course, gold. We talked about this last time. I got long on the 7th. Raphael wasn't ready for us to get long yet, but I got long there. I took some off, actually, last Friday on a profit-taking opportunity, hoping it got more of a pullback than this. And then, of course, today it just started to run. So I'm not going to chase it. I have about a 400 basis point position. I'll keep that. I'll let that go for a bit. See how it performs. But we're at a new all-time high for gold, almost in GLD. Yeah, about this is close to an all-time high. This is the October 30th high. So close to an all-time high, if not an all-time high today, in dollar terms. GDX. Had a signal on the 10th, got long on the 10th. GDX is my nemesis. I was getting ready to cut the thing, and just because I didn't think it was going to work. And then, of course, today we got a nice move, and so I'm long. I probably should have taken some profits today. I didn't, because this thing's just starting to really work. It's still bearish trend in my book, but it's taken out this level here. And I'm seeing this as, perhaps we got a big move. There was a issue with London bullion, apparently, and this has been a driver today. And then yesterday I was watching after the Fed announcement, and I was short TLT via TBT. I got short in the pre-market, and then well, I got long TBT, which is short TLT, in the pre-market, and then TLT was down after the announcement, then started to kind of rebound, and so I cut my TBT position. Had about a 1.5% profit on it, and then saw that silver was starting to behave, and so I got long at 28.05, I think 28.06 on SLV, and of course something happened today. We got a nice pop on that, so got lucky there, but I just saw that it was not in the face of what should have been considered a tight tight Fed funds. We got a move in silver and gold, so that's a real positive in my book. Like I mentioned, got long bond instruments starting on the 17th. You get long, you wait, stop, not hit. Let's just see if the thing moves. Started to move in my direction. It's early. Same thing with LQD, which is corporates, moving a little bit better. Same thing with IEF, which is the 10-year. I didn't like TLT. I'm not long TLT, but I am long the 10-year. Got long on the 17th, starting to work a little bit, getting paid carry to sit there. TIP is something I saw developing as well. Got long the 17th, added on the 22nd, and that has again, small moves here, but starting to work. EMB, which is emerging market bonds, got long the 17th. That's actually working a little better in the face of weak dollar. So we're liking these plays that are not dollar friendly. HYG got long. This was not a signal so much as I had a bullish, it shifted from neutral trend in my book to bullish trend on the 23rd. So I took a position, added to the position, still long, holding. CTA we talked about last time. This is a trend following ETF. It has been one of my larger positions. Got long here, 6th of January, added on the 8th. Took some profits here. My system said take some profits, so I did. And it immediately sold off, so I added back about a quarter of what I sold. Trying to be cute, but CTA has been a good position. I've patiently waiting for it to do something. This is a steepener trade, really hasn't performed well. Stop's not been hit. I don't have a huge amount of capital in this, but I will continue to see whether the steepener plays or not. The last few days we've had firm at the short end, weak at the longer end of the curve, and so we've had a bit of a flattening of a yield curve again. TUA, which is the 2-year, it's a leveraged 2-year note, again, put out by Simplify. That has been reasonably positive, still kind of sitting there, yields about 4%, 4.5%. Money market accounts now are down to about 4.25 here, so need to look for other vehicles to generate cash. This looks like it could be a good one. Mentioned that I got long MDY. MDY is mid-cap ETF. And so I started a position and I built the position starting on the 17th, added. Now I've got a full position and I'm waiting for it either to work, which kind of did today, or waiting for it to hit my stops. Just a couple more. EZU. Now this was one where it was like, geez, do I really buy this thing? It had popped this week. This is the week of the 10th, coming into the 17th. Friday the 17th. My system said be long this thing. I got long this thing, and it just has run. I've wanted to add to this and just find no opportunity. I just have a super hard time chasing most of the time, so I couldn't do anything there. But would like to add if I got a nice pullback. Same with EFA. Which is all world index, ex-US. Little better entries, got long the 16th and 17th, so are developing, is working reasonably well so far. And then EEM, same deal. And that really has just been chopping around. And then today we got a nice pop in EEM. A lot of that probably driven by China. I can tell by my I have a small position in my trading account and FXI, which is really popped today. And then I mentioned that we talked about this last time. This is PDBC. It's a broad vertical commodities fund. It got long here on the 31st. My system said add. It was getting bullish. I added into the. I hate to do that, but I did. I added there. I added here. I added here on the pullback. I added one more time. Stop, still not hit. This thing is either going to sink or swim. I don't know what it's going to do, but I do have an emerging, as I mentioned, weekly sell on it. So likely, if that holds, I'll be taking 25% of this position off, and then still holding the position, waiting for it to manifest in some way, shape, or form, either stop hit or goes higher. And then lastly, XLE got long here, added here, took some profits here, and now at the end of last week, I took 25% off because I had a sell signal on my weekly, and then stop hit soon thereafter. I'm out of XLE. So, you know, we're seeing a shift away from commodities a bit. We're seeing more of a broader equity rally. We're seeing some weakening in the dollar, which is buoyed by the Trump trade or the Trump tariff threats on occasion, but appears to be showing some weakness in the face of what looks to be some declining growth in the US. So that, Vi, is what I have.
Thanks, Ted. Great portfolio and very interesting. The only thing that's missing in your portfolio is some Bitcoin exposure. By the way, a serious question. Well, maybe not so serious. I don't remember you ever talking about Bitcoin.
I have some in. I have a small IRA account, and I have FBTC, which is a Fidelity BTC fund. So yeah, I have some exposure, not a lot, and I've had ETH in my wallet for 5 years now. I just sit on it. So, but not wild about that. But clearly, we had a nice move today, so we could be looking at a breakout to a new high. It looks like, so we'll see.
Interesting. Now we're talking. I don't know. I'm a short-term trader, so I trade everything that moves there. But I just remembered, but I don't remember you talking about crypto, so I thought I will ask. Okay. So first of all, greetings to Raphael. Raphael has a flu now, so we wish you get well soon. And today I will try to do something that most likely I have never done on the show. So Raphael always does a great job by going through all the most important instruments and tickers, and shows us his view and signals and so on. So I will try to do the same, but of course based on my process, which is a little bit different. So I hope it will be helpful. But first let's talk about the usual stuff, what signals are saying and what's happening and what can we do with it. Actually, I prepared one article, and it's very interesting that Ted mentioned London bullion. I remember, like a lot of years ago, I saw this study about what happens when some news appear on covers of The Economist, Barron's, or other publications like that, and usually it has a very good correlation with the end of some moves. And actually, yesterday, so today's, I already received like a new issue of Financial Times like 5 minutes ago. So for me, it's already yesterday's issue, but actually it's today's issue of Financial Times had this on the first page, and it's a very short read, nothing special, but basically because market is scared about tariffs on imports, and of course also because of a spread between London spot gold and and futures that traders are shipping very big quantities of gold to Chicago, to the COMEX exchange, which everything makes sense, but now everyone is talking about it. So, and yeah, so gold futures roll today, and of course, when we had this roll now, gold is, let's call it very high, and it's very good for bulls, and all the signals look very bullish, but my view on that would be that basically move your stops to profit and hold if you have it, but I would not buy more gold here. I understand, but I don't trade based on macro and all this news, and I just follow the signal. But just because of that, I would say that maybe let this thing. If you have some, you hold, but I'm not a buyer here. Yeah, and I just wanted to mention that because Ted mentioned London bullion. So okay, now let's get over with this. So correlations. I tweeted before the show that average sector correlations to SPY are very low. Actually, currently they are like 0.16, and no surprise. First idea that comes to mind is, of course, tech, because of what happened on Monday and with SMH, NVIDIA, and other. But actually, it's not only that. We also have a situation with Trump, let's call it, talking oil prices down. So also energy sector is doing interesting things. And basically, the market goes up on not a lot of sectors. So, of course, financials, some people are really bullish banks. But yeah, it's not only tech, what we have. And I will go through all the indices a little bit later, but I just wanted to show you that first of all, of course, it's not the lowest thing it had ever been, but this thing will not stay like this forever. And my expectation is that this year, or maybe even this quarter, we will get more spikes in volatility. But before the show, I said what it said, and the main issue with this regime, so of course with this with tariffs and this situation with AI and energy, is that increasing in volatility does not really mean that we will get a huge drops in the main indices. So I'm talking about NASDAQ, SPX, and so on. So maybe that volatility will stay inside some sectors, but of course we will see. Keep that in mind. My main expectation, even though signals on main markets are quite bullish, my expectations are that we will get some bumpy road ahead. So yeah, it's a 10-day correlation. Let's go to very short time frame. So 5-day correlation, and now we get this. So it's very low, and of course we let's check the financials, minus 0.43. Also, let's check REITs are negative, and energy is pretty low. So now the changes in correlations, which is for me even more important, we see that actually a lot of sectors have quite significant decrease in the correlation. So keep that in mind. That I always talk in a way that, oh, you know, we are in not a high correlation, relatively low to mid, so everything is fine. Risk is quite low. Markets are not overcrowded, but now situation is a little bit different because now we are in this too low average correlation. Let's call it too low. Nothing, of course, is too high. Nothing is too low. But in the very short term, it's even negative. So now basically what we see is market is going up. We see some buying coming in the markets are almost daily, especially starting on Tuesday after this Monday thing, which, by the way, I will touch on that. I think that this buying spree came from retail. Yeah, but I will touch on that a little bit later. But basically, let's say that markets are going up just because of a couple of things. So keep that in mind, and it can lead to a bumpy road ahead. So I wanted to touch on correlations. These are insanely low, and in the 5-day time frame, we even have negatives, and when it comes to average sector correlations, having negative values is pretty telling. So yeah, I wanted to tell that not only correlations of 0.95 or 0.9 and above mean that everything is overcrowded and the market should readjust itself, which usually means some sort of correction. But also when we have a too low correlation, it also can't stay like that for long, because if it will, market will become very bumpy, because then you just don't know which sector will make your life harder tomorrow, which is also quite hard to trade. So yeah, now let's go to charts and signals. Yeah, I wanted to touch on gold. Gold, we can check the ranges. So yeah, I will start on gold, because why not? Yeah, so today after the roll, and I never back adjust. First of all, I always use futures. I will open GLD chart soon, but I always use futures, always settlement price, and never back adjust. Back adjust basically what it does, it removes the gaps. So I don't do that, and because on back adjusted basis, actually we are not making any insane highs, but yeah, I always roll and don't back adjust. So on that perspective, we touched the high of regular term range today, as we can see, but we still have upside on the longer term range, and no surprise after today's move, everything adjusted, but upside downside ratio is way below 1, so be careful. And like I said with gold, I everything looks really good, and also from my interpretation of macro things, I know that I'm not an expert, but how I think everything looks good, but I would not buy gold here. Where I would buy it, I can yeah, let's draw some anchor VWAP. Yeah, I don't do much technical analysis, but I always like to study volume and average prices based on VWAPs and different anchors. So yeah, if we get this dip, which a lot of people will argue that we will not get, then maybe I would be interested to buying some gold, not for trading, but for some swing. Yeah, for those who trade ETFs, let's move to GLD. Let's move to GLD, but I can immediately say that from signal perspective, it will not be much different from futures. It's just levels, of course, are different, and it's not that high. Basically, if you back adjust futures, here's what you get. So same situation, but even on a longer term range, we have lower upside compared to the downside. Other than that, everything bullish trend, of course, no surprise. We have this area, so yeah. Actually, if we feel quite strange, but I started with gold, but yeah, let's blame that Financial Times article. Okay, let's go to ES, which is my main instrument of trading every single day. So I talked about that level multiple times, but you need to really know that 59.49 times 0.25, which is yearly open on futures, and we had it tested multiple times, and actually this was the low on Monday, so these levels continued to work and market bounced. So yeah, from trend perspective, I really don't like that we are relatively close to the neutral area, but this is because actually markets are in a chop mode since the beginning of 2025, and of course they had to make a new high after Trump's inauguration, so they did it. But like I said, I expect quite a bumpy road ahead and quite a lot of volatility. Now, signal. From a ranges perspective, we have almost capped downside. Of course, it's not capped, but when I just do a quick check on my watch list, what signals are saying, I just say, okay, these are relatively close. And also, this is quite close to the VWAP of recent lows that happened in August. So, okay. Upside downside ratio on a long term, basically, we are almost in the middle. So, I don't know. I will not be the guy who says that market will crash, but keep that in mind. Watch VIX, watch volatility. Of course, we will touch on VIX a little bit later. But if you're trading things like SPY and you are not investing for a long term or so, I would not initiate the position. And also, I always mention that I always talk from the perspective of initiating a position. If you, of course, hold a position and just want to manage it actively, it's a different story. But basically, it's not a place to initiate or not a place to add, especially after this week and all these events that we see in the markets. Dispersion, of course. Ted talked about that, so we clearly see who the winner is, and the winner is the Dow. We see the same thing in DIA and of course in YM futures. So we will see how it goes, and even on Monday, I believe this was the only index contract that was that closed in the green. So yeah, and of course it's up on a weekend quite a lot on a week, up on a weekend, and basically we are flirting with the highs here. One thing to note is that correction is very probable, at least a small one, just because of these upside downside ratios. And we see this action quite a lot in strong bull markets where, you know, top end of the range just goes higher, and basically the next day market just flirts with it, and it goes higher every single day. But that's what I call not sustainable moves. And if you have access to trading view indicators, you can do a very simple test. Just open any chart you are interested in and watch what happened in the past when you see all these things. Basically, I would think of it as another metric of being overbought, which of course we all know from trading perspective that things can stay overbought for a long time. But keep that in mind. But the longer term upside is quite awesome. We have a longer term range at 47,300, which is of course would be very nice, especially for investors who have Dow stocks or DIA. But on a short-term basis, I would be very cautious about that. Again, I don't see any signals that are just yelling to me that, oh my God, get out, sell or short everything. No, definitely not. I would watch Max 7 for those signals and some other sector ETFs that I will touch But based on these contracts, they're just going up. And yeah, so maybe Trump will be happier if they continue to do so. We will see. So yeah, I'll try to do it faster, but Russell. Yeah, so Russell to try to do try to become positive on a week, not really, but Russell doesn't look that overbought, of course, as YM or as bad as some other indices, but yeah, I don't see any significant upside in the regular term, but I see very significant upside in the longer term ranges. So for those who use our process and using my fractal ranges, I think that these overviews will help at least for some time. Now we move to some stocks, and then I'll touch on some ETFs. So of course, NVIDIA. We had a very nice Monday and pretty nice Tuesday. And on Tuesday, I was watching the tape, and I was watching the tape quite a lot, and I noticed that there were a lot of small market orders in the tape, and especially because they are market orders, the main conclusion was that retail were buying this stock, not institutions. So, of course, we have institutional flows all the time, but the majority of the buying came from retail side. So I still would think that we will get some flush in the stock after this rebound, let's call it a bounce. Yeah, the stock is lower, a lot lower on a week. And yeah, so we have some anchored VWAPs from recent earnings and recent lows. So these are the levels to watch. And if it falls below, basically, I would be willing to either hold shorts closer to 100 area or to buy some closer to 100 area. And what is 100 area? It's anchored VWAP from the lows that happened basically in the beginning of 2024. Yeah, it's just a VWAP, nothing proprietary, but I find it very helpful sometimes to look at it. But yeah, when it comes to ranges, I don't think that there's a lot to talk about. Basically, we are extending the ranges on multiple days this week, and yeah, low end of the range is getting lower, and the high end of the range is also getting lower. So keep in mind and don't get into this trap, because of course after such moves, the model will show that upside downside ratio is pretty good. Well, because of course it fell, it touched the low end of the range and so on. But just because it's a bearish trend and because we have this big selling, don't make this mistake and don't buy it just because the upside downside ratio is positive. Yeah, TLT. Yeah, I know that Ted said that he doesn't like TLT, so on this we agree. I don't like TLT either. So yeah, but yeah, okay. So bearish trend, close to neutral, not a lot of upside. We had some bounce since the middle of January, but when I watch yields and then I watch signals on TLTs and some bond ETFs, I mean, I see not a single reason why I would touch this thing, especially on the long side. So keep in mind, if we get another green day, it can easily turn into neutral, but it would take it to go way above 90-50 to become bullish. And of course, if it becomes bullish, then we will see what the ranges are telling us. Yeah, but for now, Ted said The dollar is getting weaker. So let's see the dollar. Yeah, so with dollar and especially with what's happening, I would expect one of the following, and of course my behavior will differ. I would expect it to go way higher. Way higher, it means new high, and then we will see. But I would be very happy to buy it closer to the low end of the range. I said I don't expect in upcoming months. So let's say in Q1, I don't expect dollar to turn bearish. I don't expect dollar to experience significant drops. So of course it's FX. So we need to define what a significant drop is, because the values are way different than stocks. But yeah, I don't expect the dollar to go down like 2% or more. I would not. So of course we'll see if I'm right or not. But dollar is bullish. No surprise. I keep most of my free cash not only in trading accounts in dollars or in T-bills, which is anyway I will receive dollars. So from my perspective as a European, and dollar is not my main currency. From my perspective, T-bills, I just call it dollars. Because I have no reason, honestly, to believe that euro, which is my main currency, will be worth much. So, yeah, as a European, I hope I'm wrong, but yeah, go dollar. And actually, I wanted to ask Ted what you see in the dollar when you said that dollar looks weaker.
So yeah, so I was looking at that my weekly signal, got a sell signal. It's still bullish trend to your point. It's just that it's run its course. My stop was hit, so I'm neutral on it. I did get a buy signal on the dollar short UDN, so I got long UDN. So we'll see how that plays out. Yeah, there you go. So yeah, we'll see how that plays out. But yeah, it's I'm seeing some of the other currencies start to come to favor.
Oh yeah. I'm watching quite a few currencies. Not this one. I just wanted to show this one that basically, if I had to be a technical analysis guru and pretend that I understand the charts, which is definitely I'm not, I would draw something like that, bam, 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 and then zero down below one. So that's my analysis of the euro. So I hope I'm wrong. I'm wrong. And yeah, I'm watching yen. I'm watching CAD. Of course, I have no positions, but I agree with the point, and I don't know if it was you who said, but yen will be an awesome trade. The question is when, and that question is if it happens this year or sooner, or will it happen in 2027? We have no idea, but yen will be an awesome trade. That I agree. From the FX perspective, euro, I don't know. Honestly, I think that cutting rates 5 times in a row was quite an idiotic move, but they know what they are doing, so, so it's fine. It's fine. Okay, I don't know if I missed something. Bitcoin, of course. Yeah, Bitcoin. Okay, which one to choose? Let's do Binance. I believe they have the highest volume. I trade futures, but not CME ones. I trade perpetual futures on Bitcoin, on Coinbase. I believe for some reason perpetual futures are not available in the US, even though I think that this product is genius. No expiration, and Anyway, so Bitcoin spot, Binance Exchange, we had quite a nice opportunity to buy or to add to Bitcoin when it turned back into a bullish trend, and at the same time we had quite a nice upside downside ratio. So yeah, but for Bitcoin, I look at it a little bit differently. So of course we have a trend, which is important, but this is a very, very powerful tool. This is a very powerful tool, and I always use it when I want to get better entry points on something that I may hold for longer periods of time. So yeah, of course, longer term downside target to buy would be at like 90,000 or so, which is of course very, very aggressive place, and we will see if we get that or not. But other than that, we are above VWAPs. Bitcoin made a recent high, and now we had this correction, and this correction can be easily thought of as a decent one, and now I would expect Bitcoin to make a new high. So now Bitcoin bulls will be happy, or maybe not. I don't know. But Bitcoin looks good. Bitcoin looks good. Now upside downside ratio. Let's take a look at the longer term. Then let's take a look at the longer term upside downside ratio, and currently we have 113,000 is the top of the longer term range. We have some signs of it becoming overbought, but actually only on a very, very long perspective. If you look at my momentum score indicator, the green one is the green line is 90-day period. So that's the only one which is above 2. So in the short term, Bitcoin can go higher, and I expect that to happen. But of course, with the volatility of Bitcoin, before it goes higher, it can go $10,000 down without even blinking. But I don't expect that. Yeah, I'll check if we have any question. No, I don't see any questions. So, well, anything to add to what I was talking about, or any views on the markets? Now we will wait for a couple of minutes to see if someone has any questions, and if not, I believe we will end the show.
What are you thinking about crude oil?
Yeah, I missed that. Like I said, Raphael does awesome.
He always hits crude. Got to see the crude.
No, he always hits everything, and I forgot about that. So I'll do with USO. You guess what happened? I think Trump happened. Yeah, so a trap which sometimes can be a good signal to buy, but I never buy when that happens, because this very, very positive upside downside ratio is just because it fell quite a lot in a very, very short term. When it comes to the USO, it's oversold on a regular term basis, and but it has plenty of downside on a longer term basis. Yeah, so it's oversold on a regular term, and the low end of the range is $71, 71.7 on a longer term basis. So watch the trend. Now it is neutral, and yeah, if it becomes bullish again, I will be in the mood of not shorting that. But if it honestly, when it comes to especially CL futures, which we will take a look at in a minute, honestly, if it turns bearish, I will be more than happy to short oil. I will be more than happy to short oil. I think that it's a very probable scenario. So yeah. of course, I call it a trap. Of course, when I say it and when it bounces, of course, people will say that it's not a trap. It's not. But after big, when I see such upside downside ratio in a normal market environment, I say, oh, awesome signal. Here, I need to wait, especially because we are in a neutral trend. But yeah, oil is not a buy. It can be a really nice buy if rhetorics change, and yeah, we will see. But the level is 71.7 and 70 and 86.4. Basically, we are in the middle of the longer term range. So yeah, CL futures tried to become bearish, but not yet. Let's load the ranges. Yeah, absolutely the same situation. So if you watch oil futures, which you should, I always recommend to have a watch list of futures markets, because more often than not, futures markets front run. And I had a couple of questions and emails from users that, oh, you're always talking about futures. I don't trade futures. It's awesome. I think majority of people shouldn't touch futures, but people need to watch what's happening in the futures market. So just have a watch list with futures. It's very useful, and in some cases, at least for me, even more useful than watching SPX or NDX, for example. So yeah, here are the levels. You can see that longer term downside is 67, upside is 81.3, and regular term is 79.3 and 70.89. So yeah, we are in this interesting environment. I'm not talking about only oil, but about equities and sectors where I expect volatility. I expect volatility in multiple things. Of course, there will be volatility even in the dollar because of any new stuff that Trump will say or do, or something else. But volatility in commodities because of tariffs, obviously, volatility in treasury yields, volatility in equities. So yeah, from my trading perspective, I'm pretty excited about that. But for these upcoming 2 weeks, I would say that for a swing trading portfolio, I would not buy anything that has a positive beta. So so basically, I would not buy anything. That's the thing. Holding dollars and bills, and let's see, because there will be plenty of opportunities and plenty of ways to lose money or make money on an intraday perspective. But actually, I made a tweet on Monday. Actually, this was one of the rare days when, as a futures trader, I literally saw that trading with zero DTEs was a lot better way to manage risk than trading futures outright. So yeah, I wanted to, yeah, it was funny because as a futures trader, my process is always having tight stops, of course, and on that volatility. For NQ, let's say stop is 5 to 10 points. Well, guess what? On Monday, it was not possible to trade with 5 to 10 point stop. So just because of anything, doesn't matter, you're long or short, all these spikes, it was basically impossible. And yeah, so so instead I was buying zero DTs like crazy, buying, selling, and yeah, it was funny. So yeah, like I said, there will be plenty of opportunities to make or lose money if day trading is your thing, but now I will use my right to not buy anything for overnight exposure, and we'll see how it goes. I'm sure we will get quite an interesting upcoming 2 weeks. And most likely we will get quite an interesting upcoming 4 years. So I'm even more excited about that.
No doubt, no doubt.
Yeah, we have a comment. So Lisa says, thank you. I learned something each time I listen to you too. So thank you very much. Glad that it's useful. And yeah, we appreciate the comments. I'll just check the Twitter very quickly. And on Twitter, yeah, okay. So I don't see anything to address here on Twitter. So I don't know if you don't want to add anything. I think that we will finish the show, and hopefully Raphael will get well, and hopefully nothing really bad will happen in the markets. So.
Great. Well, great to see you.
Yeah, so thanks everyone. I hope it was useful. Always send us your questions on Twitter, DMs, YouTube comments, and everywhere else you find us. And yeah, manage your risk, stay healthy, stay wealthy, and all the best. See you in 2 weeks. Bye, Ted.
Good night.